Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum. Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
Hello, this is The Global View on this Thursday. I'm Andrew Gagan. Good to have you with us back here at Ausbiz. Let's get across what we saw overnight. Equity markets rising despite the imposition of more US tariffs, with President Trump punishing India with an additional 25% tariff on its exports because it continues to import Russian oil. And further to that, the president then announced that the US is putting a 100% tariff on semiconductor chips imported into the country. Now on Wall Street, stocks gained as earnings beat expectations, with investor sentiment remaining positive, particularly amid dovish Fed speak. Mega cap tech stocks led the way, Amazon and Tesla rallying, and Apple shares climbed on news it plans to announce a domestic manufacturing pledge of $100 billion that will focus on bringing more manufacturing back to the United States, with expectations that iPhones will avert new tariffs on imports from India. Arista Network shares jumped after the cloud networking company projected current quarter revenue above estimates. Advanced Micro Devices and Supermicro Computer fell sharply after the companies posted disappointing results in their data center segments. And investors also keenly watching results from consumer-facing stocks, including McDonald's, which rose after the fast food restaurant's affordable menu drove global sales past expectations. Disney posting better than expected quarterly results and raised its annual profit forecast, led by gains in the streaming business, which is expected to be the centerpiece of its growth strategy. However, its traditional TV business saw a 28% decline in operating income. Well, President Trump is imposing a 100% tariff on semiconductor chips imported into the country, saying the new tariff rate would apply to all chips and semiconductors coming into the United States, but would not apply to companies that have made a commitment to manufacture in the US. And he's imposed an additional 25% tariff on Indian goods because of India's continued imports of Russian oil. The new import tax is due to come into effect at the end of the month and will raise duties on some Indian exports to 50%. However, the executive order did not mention China, which also imports Russian oil. Meanwhile, President Trump is open to meeting Russian President Vladimir Putin as soon as next week, according to the White House, as the US looks to impose secondary sanctions on Russia at the end of this week in an effort to pressure Vladimir Putin to end the war in Ukraine. Well, there's been more dovish commentary from US Fed Reserve members, with Neil Kashkari advocating 2 cuts by the end of the year, saying the economy is slowing. In the near term, it may be appropriate to start adjusting the federal funds rate. How can we wait until tariff effects become clear? And fellow Fed member Lisa Cook calling the July jobs report concerning, saying it could signal an inflection point for the US economy, saying these revisions are somewhat typical of turning points. Longer dated US Treasury yields were higher after a weak auction of the 10-year note, rising the yield on the note rising to 4.22%, the 2-year down to 3.7%. And the US dollar index down around 0.5% on the day, on bets that the Fed will cut rates more times than previously expected this year. The Aussie is back above 65 US cents, and Bitcoin is trading at around 115,000 US dollars. Oil prices, they've slid to an 8-week low after President Trump's remarks about progress in talks with Moscow created uncertainty on whether the US would impose new sanctions on Russia, which is the world's second biggest producer of crude after the US. Brent crude futures down 1% at $66 a barrel. Copper rose, iron ore fell around 0.5% to $101 a tonne, and gold eased as investors took profits after prices hit a near 2-week high. Spot gold around $3,370 an ounce. Let's get across what we're seeing stateside. Ira Epstein joining us again from Linn Associates. Ira, welcome back. Let's begin with, well, more tariff news, but interestingly, Apple clearly wants to get on the right side of President Trump, concerned about obviously manufacturing phones offshore, therefore it wants to bring those back. What did you make of that announcement?
I thought that $100 billion buys you an invite to the White House. That's what I thought. I started laughing at it. If you think about it, we haven't seen or heard from Tim Cook and Washington together for a long time. It's been weeks. And if you'll remember, the last time we saw that, Mr. Cook wasn't even at one of the conferences that the president wanted. He said, "Where's Tim Cook?" He wasn't there. So this is a complete difference. And what it is you can only stand up to President Trump so much if you want something from him. And what Apple wants from him are no tariffs on phones manufactured out of China or out of India. In order to get it, they're pledging $600 billion over 4 years. Now, my math shows that the president has about 3.5 years left, just shy of that, in his term. So we'll see during that time frame just what is done. I did like out of that Corning will now be the manufacturer for all iPhones that use the glass around them. And so that'll be worldwide. So they won't be picking it up from different areas. But the reality is what we said when we were talking a while ago. And what I said is you can't just say, hey, let's manufacture something you don't make in America. And you're going to do that 1, 2, 3. You don't have, number one, the expertise. Number two, you don't have the supply chains. Number three, you don't have the facilities. I can go on and on with this. So what you do is you start making the components. And that's exactly the route that this is going on. Whether this last good news for Apple, I don't know. Apple's missed so terribly on AI that I would think they've got to go out and buy it from somebody in order to get back into the game, because I think they're out of the game on that. But we saw that. We saw news of the president talking that he wants to possibly agree to a meeting with Putin. However, the tariffs probably go on first. I think President Trump feels burned by Putin. I think he doesn't trust him the way that he did just a year ago. And now what it's come down to is he'll put the pressure on and keep it there until something happens. I liked that he said that Putin has to meet with Zelensky out of Ukraine. Now, if that happens, that's the first meeting that the two would have that I'm aware of since this war has begun. So we'll see where that all goes. But that's the politics. The marketplace, there's something big going on. And that thing that we have to understand is the Treasury is taking a different route. They're starting to price their debt. They're making a big bet. I don't know if it'll work or not, that they're going to move their debt to short term. There's a monster Treasury auction tomorrow. And I mean monstrous, where they're going for, I think, 4-week bills and the biggest amount that I've ever seen. And we'll see how the market takes that, because if they keep the debt rolling short term and interest rates, in fact, do fall, they're a big winner, and that gets the numbers down for the Trump tax package. That seems to be the bet they're making.
What are you making of that latest Fed speak? As I mentioned there, heard from Lisa Cook, Neil Kashkari there, obviously pointing to the fact they do want rates cut, as of course the president does. So what are the prospects then they are going to cut in September, do you think, Ira?
Well, here's what Kashkari did, and I give him credit. He really explained it well. I was watching the interview this morning, and what he said is, we're not going to know the impact of tariffs for possibly another year. A lot of companies front-loaded products. They knew the tariffs were coming, so they're selling out of inventory. There's a certain amount that everybody, let's use the word eating. I'll take a little bit of a hit on it. You take a little bit of a hit. And we haven't seen the full impact because those goods are still here coming out of inventory. And as he pointed out, that could be months. It could be another year down the road. So he said if the Fed gets frozen off of just thinking what are tariffs going to do, they'll be in a terrible position. In front of them is a weakening labor market, if we're to believe the latest figures that we just saw. And if that is the case, that's what has to be addressed. When asked by the interviewer, well, what happens if you go there and then you have to go back up? And he answered it properly. He said, then we go back up. And she said, wouldn't that hurt credibility? And he said, no, it won't hurt it because we're acting on what we have, the data at hand. If the data changes on us, we're aware that those tariffs might come. We can address how many cuts. And that's when he said 2 cuts this year. I've heard people talking that there'll be one September and October and December. So we'll see if we get 2 to 3, but the market is really pricing in those cuts. The data we get on these jobless claims each week has to be watched. They have been very reliable if you extrapolate from them what's going on in the labor market. I don't know that any of us now trust the data because of the big revisions that we keep getting.
Ira, what are you seeing in terms of the immediate effects of tariffs in the States? And I guess through the lens of what we're hearing from the corporates, of course, we're near the end of earnings season. They have referenced that, many companies saying, look, they've absorbed those costs, but there's going to come a time when they're going to have to push them onto the consumer.
Well, what they're telling you is just what Kashkari said. They don't want to be frozen in place. They now know the amounts of the tariffs. They know what they have to deal with. They know that if anything, if companies or countries come to the table and negotiate with the president, those tariffs can go down. If they take the route that India is taking, that necessarily won't be good. Brazil's taking an even worse route. They are throwing everything in the president's face, and he said, fine, we'll give you another 25% tariff on everything, but it won't kick in for 3 weeks. What do you think that meant? That meant come negotiate with me. That's exactly what that meant. I don't see how you can stop some of these countries from buying Russian oil. I mean, they don't have to listen to the president, number one. Number two, they're making a lot of money, Brazil especially. They're buying deeply discounted, or it was deeply discounted oil. Now it's not so discounted, but it was. And then they refine it and they make money on the open market from buying cheap oil, selling it at world prices of refined. That's a hard thing for them not to have. So that was the game they're doing. Notice China was never mentioned. They're the biggest buyer of oil. How could you punish Brazil and you don't punish China? Something doesn't make sense here.
Yep.
So I think that it's a game of, again, Trump negotiations. If you're trying to put logic on it, throw it right out the window. It isn't logical. It's the art of negotiation.
Yes, it's his plan to wrong foot his opponents. Ira, thanks for joining us from Linn Associates.
Thanks for having me back.
Let's check in where we're likely to start on this Thursday. A negative start, it would seem, despite positivity we saw on global markets overnight. So SPI futures are off 0.3%. We're also going to catch up, of course, with the latest earnings results, in particular from AMP and Light & Wonder. Stay with us. The Open, just a couple of minutes away.